Hello, everybody, and welcome to another Pepperstone Learn It Live webinar. I can tell you I'm very pumped for this one because what are we going to be discussing? Advanced scalping techniques for share CFD traders. My name's Thomas Atkinson from FX Evolution. I'm joined as always by Tyrone. How are you going, Ty?
Good, thank you. Yes, we are very excited about talking about something that's very close to our hearts, being the stock market, and CFDs are a great way to actually take advantage of those markets. So, yeah, looking forward to this one and sharing some of the insights that we can pass on to you to really get you involved in the CFD trading. It's a really good opportunity to get involved in the Australian and American markets.
Excellent. Well, just before we get started there, Ty, just the information contained in this video is obviously of a generic in nature and educational purpose only. The information will not take into account your personal objectives, financial situation, or needs. And this information is not to be construed as an offer, recommendation, or solicitation to buy, sell, or participate in any particular trading strategy. So, Tyrone, just a quick shout out as we always do. Feel free to, of course, follow Pepperstone and FX Evolution's groups. We have FX Evolution has, of course, YouTube, and so is Pepperstone. And if you're looking for a recording of this session, jump on over to Pepperstone's YouTube. So search Pepperstone in YouTube and make sure you subscribe because we upload these there. Also, the Telegram is great. We'll pop that link back into the chat right now. And if you want to follow it, that's with all the tidbits of information coming out from Pepperstone, daily updates, informing you of the latest and greatest bits of information that you need to be aware of. It saves you a lot of time when you have a great source like that. And I can tell you, I follow it on the daily, Ty. So what are we going to be covering today? Well, we're going to be taking a look at 3 different types of scalping techniques. One based on structure. You guys know that we love price action here, and we always talk about price action psychology. And I love the idea of finding good structure and then waiting for the breakout of that. So we'll have a strategy on that one. We'll be going through it together. Then we've also got live charts and price action analysis. And because this is more of an advanced techniques one, we'll probably be and spend a lot of the time in the charts as much as possible to really give you an idea of what it takes and also some of the important things to go through when it comes to analyzing a stock or a share in the markets. And then we'll have a look at key scalping entry points on smaller timeframes and a live Q&A with our team. If you have questions, feel free to ask them throughout the session and we'll answer them as best we can as we go. So firstly, whenever you're trading shares, and we said this last time in our share CFD session, it's important that we are aware of earnings. Now, if you're trading the Australian market or you're trading Pepperstone's American market, you need to be aware when an earnings report is coming out, because if you're not, you can get some nasty surprises, can't you, Tyrone?
Oh, most definitely. It's probably one of the most important things you need to be aware of when you are actually trading CFDs, short of the open times of the market that you're trading, because without it, you can get, it's a little bit like getting caught in an interest rate decision in the currency that you're trading without knowing one is being about to be released, but sometimes even worse, because reports can really fluctuate the results of one of these moves. So you've got to be really, really careful. You must know exactly when they are reporting, at least have a day's view of when it's coming out so you can really keep on top of it. Very important.
Another one is unforeseen volatile news, such as trading halts can occur. Now, if you're trading the Australian market, it's more likely these types of things will happen. You may see trading halts that could last days as well. So you need to be aware that that can happen when it comes to trading share CFDs. But it's not all scary, Ty. There's a lot of great opportunity as well. And we get asked this question a lot. Which are the best to start with? Well, as an advanced traders out there, I'm sure you guys are aware, like ASX 20, S&P 50, the top kind of stocks out there are actually the great place to start, but they're also where most advanced traders end up. So usually it's a cycle like this, as I like to say it, Ty. People start, let's call it, on the big blue chips, Apple, Tesla, over here, Commonwealth Bank, the FMG, Rio, those types of stocks. Then they move on to penny stocks. Then they come back to mid stocks. Then they end up going back to blue chip stocks. Would you say that's a fair cycle, Ty? Maybe the cycle we followed?
It is definitely. I think it's the easiest path to follow, actually. And I think people just gravitate to it, actually. It's definitely the way you go.
Yeah, so you actually may end up doing it full circle. And there's a reason for that. And one of the reasons people stick to the big blue chips is because they usually, especially when it comes to trading and day trading and scalping, is they often reach an area after a trend and then consolidate. And we'll be talking about that consolidation. I've actually got some examples for you in the markets now where a trade or a stock has actually consolidated for some time, and it creates opportunity for you to buy and for you to sell inside of a channel or a range. And this is one of the best day trading strategies that you can have. Recognize a range-bound market and then, of course, trade in between that. It's sometimes no real massive trend is better for a day trader than a massive trend. And that may seem weird because massive trends really focus on swing traders, don't they, Ty, and investors? Whereas when the market goes back to normal, that's when the day trader comes out, the scalper comes out and has their fun.
Yeah.
Would you agree?
Definitely, and there is a lot of fun to be had in 8 hours of trading, whether you're trading New York, whether you're trading the Australian market. So it's very, very important to understand your technicals, of course, if you're looking at scalping the markets, but understanding what the company you're trading is involved in as well, and having a bit of a bias on that makes a big difference as well.
One of the things you want to be doing whenever you're going to a more advanced level is understand that certain market indices are going to have real effects on how your trades are going to be. You could find the best trade ever on one of the stocks that you're looking at, but unfortunately the market index is not at support or not at resistance and not the right level, and therefore it ruins your overall trade. So please be aware that if you're trading the Australian stocks, you should look at the ASX 200 whenever possible. But in general, no matter what real market you're trading in the Western developed society, you should be looking at S&P 500 as it gives us a good benchmark of the resistances, the supports, and the key psychological breakdowns of what's going on in the markets right now. Another thing, Ty, that we mentioned last time was seasonals, and this comes down to how have those markets generally performed over a longer period of time. You'll notice here I have the S&P 500 index from 1928 to 2020 and the average returns over the months. So you'll notice that April is generally more positive than many other months. July also a great month, and December and January good months. Now, this is interesting because if you're finding, let's say, bullish scalps or bullish sections where you can move up, so you're finding like bullish opportunities, let's say here in April, then you know in the back of your mind, hey, that's historically a more positive month than negative. And this helps you to get a little bit more confidence in trading your scalps and your day trades, but also gives you that bias where sometimes you know that markets usually go up. I mean, one thing that instantly you look at here, Ty, is there's more ups than downs, isn't there? It's easier to go to the buy side than it is the sell side when it comes to scalping or trading in general. I mean, it's just very clear when you look at this chart.
It is, and I think it probably, a lot of that lends itself to the fact that yeah, a stock has got a definite price, and at the end of the day, if you're trading that price, it's not like like when you're trading a currency, for instance, there's so many moving parts that determine its value, whether it's world events or trading between the countries. There's a lot of things that actually influence the price. Whereas a stock is a little bit more simple in that, yes, it can get influenced by general market movements, but more importantly, its fundamentals are what is really moving it up or down. Is it healthy? Is it not? Is it in a good trading range? It really makes it a lot easier to trade CFDs. In a lot of ways, I think CFDs can be a lot easier to trade when you get a bit of a relationship with them, because you can come to know the company and understand their general movements a lot easier than you can with a currency pair.
Absolutely, Ty. So some things to remember when we're trading CFDs, and again, I know it's more advanced here, and we will be getting to the charts just a few moments. Dividend payments, always very important to know when dividend payments are happening, especially in Australia, as they can be quite large. And when you're trading CFDs, it's a little bit different with dividend payments, so make sure you break that down. Time of day that you're trading the market, if you're trading the open, often more wild than the rest of the trade. If you're looking at scalps, maybe actually after the open occurs, after the first hour is where you can start to get more into the solid movements for the day, because things during the open, they can be like this, as the market tries to get a direction for the day, and the close is always going to be the key for your signals for the next kind of areas. Lead indicators for market sentiment, always going to be volatility index or the VIX, copper price, potentially after recessions into recovery. That's more of a longer term type of thing though, and then the US dollar index. So let's jump straight into the charts, Ty, and actually have a look at what it kind of takes to recognize from a top-down approach when we're in a range-bound market and we may want to look for scalps to each direction. I think Alphabet probably is, or Alphabet or Google, as many people know it as, this particular company right now presents a very classic range-bound market. So this is on the daily, and you may be saying, Tom, why are we looking at the daily charts? Well, the reason we are is because we're trying to recognize a market condition. And once we understand that market condition, we can start to work out the types of trades, the types of scalps that we want to go to. So I would say that this is a directionless pair right now. We're trading in a range, and therefore when we do that, we can start to dial into the smaller time frames and start to understand a little bit more about the structure and the formation that goes into this. And one of the things I really like in trading, Ty, is to really consider that if we're getting down to the bottom of the range like we were over here, that we've got like a series of troughs that are forming, and after the second one, the third one becomes quite a good area. So one of the things I like to do as a scalper or a day trader is get down to a smaller time frame and see if there's anything that's been occurring time and time again. And at this point, Ty, let's say right through the middle here, what I would have been doing is I would have been drawing a top line and a bottom line like we've done down here. And I would actually have those two lines for my day trading opportunities. Why would I do that? Well, because we had the one touch down here, we had the two touch over here, and we also had 1, 2, and look, there's a 3. So at this point, we have an opportunity to potentially dial into the smaller time frames and even look for short opportunities back down to here. And we've effectively trapped the market within two ranges. And you'll notice that right now it is actually still trapped within those ranges. If it breaks out, we have opportunity, but we can do that as of the 1 and the 2. So when you have two touches to both sides and you're in a clear rangeless market, which you've already identified in the higher time frames, this can be a good little opportunity. I mean, Ty, what do you think about these candles up here as well? The wicks have been quite good.
Yeah, most definitely. And I think with the trading range that you identified, I mean, if everyone was asking why is Thomas looking at the daily, well, it was really to give us the top and the bottom of where the market's actually doing. And not only does it give us a clear direction of where it's going to head if it breaks out of this zone, but it also gives us a consolidation. But then when we get these patterns right, smack bang in the middle of the channel, it gives us the opportunities to actually day trade this. And a sideways market is often a really good market to actually day trade because you can get these little patterns forming. And when you do eventually break out of this little congestion zone, you've got a very clear, bigger target to go for, and it can happen fairly quickly. So very, very important to identify the top resistance and the bottom support, and then look for those patterns in between. I mean, you can see prices right in the middle of this pattern at the moment, but a break of either side of this channel is going to give us a good opportunity, and you know exactly where your take profit's going to be.
Exactly, Ty. We've got that trend line coming through. Let's say the market comes down here, bounces up halfway, breaks below our trend line. What is most probable? That it moves towards the support. Now, if it breaks to the top side and doesn't go into a full-on consolidation fest like it did here, and it moves through, does a retest, where's the most likely target? Around that 2097. Now, it's probably more likely going to be a 2100. And why is that? Because that is a psychological area, but it's breaking down top into the smaller, and then recognizing opportunities. So one of the things that we really like to do is trap things within trend lines. And I think that's more of an advanced technique, but if you can see it in the market, specifically after the 1 and the 2, you can start to draw a little bit of that out. Now, there are other things that we like to do, Ty, and that is that we want to go to higher time frames and also find key levels of support or resistance. So this is now actually an Australian share. And notice down here, we hit a level during the sell-off last year, and this was actually during the pandemic. So this is CSL. It's an Australian share, and this share is all about healthcare and all about manufacturing, drugs, everything to do with really keeping people alive. They've got a lot of things, plasma, etc. So they're now in manufacturing of the drugs that are going to be going towards the vaccine. They don't have a vaccine, but they are manufacturing it. And this lead, well, firstly, there's been a sector rotation out of healthcare, which is another advanced technique, but it's bounced, it's moved down to this level, and it's done something very interesting on the higher time frames. Not only has it found support at the previous level of support, but Tyrone, it's formed a new peak, hasn't it? So when we zoom this one in on the right-hand side, we've actually formed what we like to see on a larger time frame, and that is we've formed a trough down here. We've formed a peak up here, we've got a higher trough, and now we have a higher peak confirmation. And that's right at the level of support acting as resistance. So as a scalper, what would we have done? Well, I think it's pretty clear that we would have been on this level here to the short. Why? Because this is the first touch on the way up after having a very significant downtrend where you've got 1 and 2 supports. Now, in a stock market, it's very hard for this level to initially break out of. So it's come up and then it's sold off pretty substantially, back down into a little bit of structure here, about the 250 psychological-ish kind of zone and area. And then now it's closed above. And this starts to open up that next high peak. Ty, what are your thoughts about just this from a daily? And then what do we do on the smaller timeframes now?
Yeah, once we know we've got the break, what we're looking for, we go to the smaller time frames. If we're going to scalp this, we're going to look, of course, for those smaller time frame trends and trade the pullbacks to the 20 moving average. The one great thing about technical analysis is it's transferable to everything that you look at. Okay, so what we're looking for, you can see here, look at these series of higher highs and higher lows. This is a 1 hour chart on CSL. You can see you had two very good opportunities after the trend was there to actually trade the 20 moving average in this little zone even before the break. And now what we're doing is we're waiting effectively for another 20 moving average touch. You trade them exactly the same way, and I think that's the fantastic thing. Not only do you have the arsenal of dividends and market cycles to actually analyze, but you can actually apply the technical analysis that you already know, or most of you probably already know, and apply it the exact same way. It just adds a little bit more of a turbo boost to some of these CFDs, especially if you have important information coming out on the company. And CSL is a really good example of what's being really, really popular at the moment with all of the vaccines and drug trials and all of the jazz that's actually going on that really helps a company like CSL.
Yeah, look, CSL, I just think is benefiting from that. It's hit key support, which as a person that is scalping, if you're not aware of a daily key support that's being reached, so say you didn't know this was the Feb March low last year, if you were, let's say, had short bias on it all the way through this point and you were selling it because you were following the trend down and you're scalping, etc., you should no longer be scalping this down when it hits this support. And that's why you've got to pay attention as an advanced technique from the top down, weekly, daily, 4 hour, 1 hour, 15 minute, etc. Do your research because you're putting your hard-earned change into these types of things. And when you're investing, every decision really counts. So the next tip I guess I want to talk about was when you're trading anything, and Ty mentioned it before, which was the 20 moving average, that we've got a 20 moving average, a 50 moving average, which is the blue line, and a 200 simple moving average. Now, some scalpers will say, Tom and Tyrone, it is too big. We don't use 20, I use a 5 and an 8. I understand, but in trading shares, you've got to wait for usually a little bit higher time frame. It's not so much like currency where you can be in there on a 1 minute chart as much. You want to be focusing on the 5-15 minutes whenever possible and just thinking about the way that it does trade through those zones. When you do that, then you can sometimes recognize key psychological pullbacks to 20 moving averages, etc. Like even in this potential sell-off here, or the sell-off that did occur, notice it hit the 20, it hit the 20, it hit the 20, and there were all little scalping sell-offs that were through that particular session. Now, the 20 is always a great one, but sometimes in specific longer runs, and I'll bring up Apple now, you'll have some serious pullbacks to amazing moving averages. Let me have a look here. Just see if I've got it. I think I've got Apple up here. Maybe I don't. There it is. So just load this up, go to the daily here. And what you'll notice during massive runs is certain timeframes, e.g. for Apple, it's going to be the 4 hour. See how the 4 hour 50 was such an amazing pickup all the way through this run? So once you recognize that that's going to be the area that you want to look at, that 4 hour 50 and the 4 hour 20, you can go in there on a smaller time frame and scalp to your heart's content every time it comes down here. If you took every single one of these, even though some went lower, if you took every one of these and didn't have any other part of your system, can you imagine the success that you'd be in? So when you're following trends and you're not in the range bound structure and you're in a new price establishment zone, follow the 20, follow the 50, look at how price interacts with those areas on the larger timeframes, like a 4 hour, then dial it in on the 15 minute, look for your signals. Now, what could your signals be? Well, there's quite a few different signals you could have. You could have bullish hammers. One of my favorites is the dual pin or the dual hammer, when you have two rejections off an area and then a follow through on the market. Now, an advanced technique to this is that you don't actually just buy because you see the hammer rejection. What you want to do is you want to buy this particular share or this particular thing when it closes, or at least it moves above. So it's closed already, then the next candle starts following through, and that's what we call the momentum candle. So it proves that all of this was real. It wasn't just fake price action. And when that momentum comes through, we can get into it. Now, if you see that at an important 20 moving average on a 4 hour, you're on a 15 minute, you see these two, and you see a follow on through, it's a very bullish signal, and you can scalp that kind of thing. So recognizing that 20s and 50s are good is just, it's just such a big thing.
And not only that, if you do miss the that a big giant burst that just happened after that big lineup of 20s, there it was again not long after. It came back to the 20 again. You can start trading it again. Like there's another 4 or 5 opportunities where you can actually jump on again and actually start joining the trend. You don't want to be just jumping on for the hell of it. You want a reason to get in, and that reason is a 20 moving average when you are in a trend. And a 4 hour is a very solid chart. So as much as it doesn't look like very big moves, I can assure you they were pretty good moves. they were very, very good moves, and you're going to see that all the time, no matter what pair or what CFD you're looking at. All you need to do is establish a trend, and then you can jump into the smaller time frames to actually trade it.
Yeah, so you just need to establish that trend. Now, the next kind of advanced technique that I just wanted to talk about, Ty, was again why we look at the higher time frames, and that is understanding key psychological zones. Now, if you do not have your higher time frames, this is Disney here. If you don't have your higher time frame zones up, you may not be aware of what you're actually achieving at that point. So let's say we were back in this period over here, which is back in last year around November period. Now, if you weren't aware that that was the previous all-time high for Disney over here, then you would not be knowing that this is probably going to have some sell-off on it. Now, if you're following this, you're buying all the way through here and you're buying to 152 and you think, 152, that's fine, I'll buy into it. What you're doing is a disservice to yourself, because yes, you can scalp on both sides of it, but just remember, if you're scalping into an all-time high, it's probably going to find some resistance around that zone. What happened? It did find some resistance and it sold off. You can tell that by this wick rejection here. Then it moved through, then it pulled back a bit, then it continued on up. So there was some resistance here, and just like that, the next level, the $180 zone, it found some resistance, sold off, and then when it moved through, guess what? It came back and retested it. Now, this is a weekly chart. So you'll be saying, what are we doing that for? We're doing it because there's several trends that happen throughout this, including big rejections off the 20 on the dailies, rejections off the 20s on the dailies. Again, the 20 is the key here in the stock market whenever you can do so, that we can take advantage of by dialing in then to the 15 minutes, the half an hours, the 1 hours, and looking for our candles. Now, if you go down to the smaller time frames, again, these types of candles, engulfing candles, all of these types of ones are going to be found around these levels on the smaller time frames, and you can scalp them and get some great exits. But why do you think Disney's selling off here? Is it because there's earnings or something? Probably not. It's just because it's hit $200 for the first time. What are a lot of traders going to do there? They're going to take profit. So it starts to struggle around that area. So if you're a seller and you like going against trend and you want to take a short position, which you can do with CFDs, that's something that you might do. So yeah, I think really what I want everyone to understand today is look at the higher time frames, find the key resistance psychological levels, have them on your charts, paint them a different color, do whatever, and then look also for the daily 20s, the weekly 20s, and those types of zones. Because if you're not aware of them, Ty, and you're scalping that 15-minute time zone into the wrong area, we've all made that mistake, and I can definitely put my hand up. I'll put my hand up and say, I did that, because I certainly did when we first started trading, there's no doubt. What are your thoughts, Ty? You ever done that one?
Yep. Oh yeah, I think everybody has, and I think, look, a lot of the common mistakes that get made, I think that there wouldn't be many traders out there that wouldn't have made them. Obviously, the key is to learn from them and actually not do them again. And I think that's probably the key to all successful trading, no matter what you're trading, actually. So, yeah, certainly learn from the mistakes that you've made in the past and don't make them again. Because at the end of the day, we're all here to make money. And hopefully you're already seeing how CFDs can be such an integral part of doing that. I know we're gonna talk about fundamental analysis, or a little bit of it shortly, but I've got to announce we are getting quite a few questions about fundamental analysis actually, and should you apply it to CFDs? Well, I think that's the beneficial thing of CFDs, that you can actually apply fundamental analysis to the stocks that you're trading in a lot easier way than you can a currency pair, with a lot less learning curve. So yeah, most definitely that question needs to be answered. You can definitely apply fundamental analysis. In fact, we've actually got a whole stock market course just on fundamental analysis, and I'm going to post a link in the room for it now. We've got a special, it's the Pepperstone CFD party discount. It's the biggest discount we've ever had on the masterclass of the stock market, and it's actually only until Friday. It's 70% off the normal price, because we're really wanting to people to embrace the CFDs that Pepperstone have put out. They are an awesome unit to trade, whether it's the American or the Australian markets. We really want people to get involved, because I think it's a really, really good way to learn even how to trade if you haven't started it to begin with, but also to add to your arsenal if you are an indice or currency trader. So I'm going to post that in the room now. And that gives you a discount of 70% on one of our masterclasses, which is all on fundamental analysis.
Wow, that's a pretty good deal, I got to say. We've certainly never done that one before. So yes, well, look, fundamental analysis and technical analysis, when it comes to CFDs, they're a match made in heaven, as Tyrone said. You've got to bring them both together. You've got to understand a little bit about the company that you're trading. I mean, some people don't. They might come in and they might say, hey, I'm looking at Rio here. I'm on the 1 hour. I can see that it hit this level before. It looks like support to me. I'm going to buy this zone. And look, are you making an informed decision? Yeah, you're making a technical decision that makes a lot of sense. You're also buying, of course, a very extended downtrend here. But the next step that I want to say, and I'll use Rio for this, is how do we recognize that a market is potentially out of a downtrend? One of my favorite ways to do that is actually recognize the slope that the downtrend is occurring on. So what has happened here with Rio is it has found a lower peak, a lower peak, a lower peak, a lower peak, and continued to sell off from. Then it's consolidated somewhat down here and broken above that. Now we're on an hour time frame here, so it's not like we're on a crazy high time frame, but when you're trading penny stocks, when you're trading CFDs of any type or anything, when they're in a downtrend or an uptrend, they'll often go on a trend line. And you can see that very clearly when you have a look at the S&P 500 right now. It's on a very steep upward trend line from the resistance side. When you have the consolidation at the key level of support, and maybe you believe in the company as well, being Rio, very good company, then you have that nice breakout. So yeah, I mean, it's really a zone that you can pay a lot more attention to. We then scroll down to the smaller time frames, go to a 15-minute. How has the price action reacted around here? And this is an advanced technique. We've got our trend line that's been broken out above. It's consolidated fairly heavily around our support. But more importantly, it has rejected this level. It has then been met by huge amounts of buying pressure and then closed above. And what does that close above on a 15-minute trigger for that trading session? Bullish movement. And this was today. So remember, this happened all today. We got a rejection in the morning, a closure above, which many people would know. I love closing above here, because what's that going to do? It's going to take out all the little stop losses that are above here, which is not good if you're in the short, but you should also be paying a lot of attention to this. And when that happens, it triggers buying. So you can actually get into these types of orders after all of the analysis that you've done, and then move it up to the next zone. Now, where has it stopped? Around 110. Why has it stopped around $110? Because it's a psychological number. So psychological numbers, closures above, trend lines down, these are all things that go into doing great technical analysis. Now, if you want to hold this for 3 months or something like that, you might be saying, okay, trend line's broken, closure above here, I've seen the support, and I'm happy with everything that I'm seeing, and I've done my fundamentals, I've done the FX Evolution stock trading masterclass, and I'm ready to go. And then you could potentially say, okay, well, I believe in this particular trade, but you're making an informed decision that many people are not doing. Most people just say, I'm going to buy Rio because I like the company. You're making informed choices about correct areas. And that's very, very important. So that's just a great example of a downward trend there, Ty, and how to spot maybe the end of the kind of selling circus and the beginning of maybe a little bit of bullish movement, at least for now. Your thoughts?
Yeah, no, 100%. And it's actually really, really good, isn't it, to look at some of the companies, especially that you're probably familiar with on an everyday level, hearing them on the news, understanding what they are, and then looking at them on a chart and actually seeing how they actually form the exact same patterns that you've probably been seeing on the Euro USD and all of the other pairs that you've been looking at. And I think, like I said, we don't even change our indicators. As you can see, the indicators that we've just highlighted here are the exact same ones. Those moving averages are exactly the same as the ones that we use in the currency markets simply because they work. We know they work. They've been proven to work, and we know them intimately, and we rely on them. And as you can see, look at the downtrend. Look at the touches on that 20 moving average on the way down. Look at that trend line. Like, that was just really easy trading on what is a household name in Australia, being Rio Tinto.
Yeah, it's great to be able to interpret the charts and to maybe actually also make a better informed decision than just going on the news and someone says Rio's down or something like that, and you said, but it's hit my support or it's hit my level. It really gets you into that excitement mode of also starting to make your own decisions and being better educated.
Is it down, or is it just reloading and getting ready for a dividend?
Oh, there you go. That's right, Ty. There's a question coming in here about CTrader, and this actually brings me to a point that I wanted to mention to everybody, and that was that we're using the Pepperstone MetaTrader 5 platform. This is where these CFDs are available, these shares in general. You can actually right-click and then go show all, left-click, and it will actually show all of them here. Now, if you're on MetaTrader 4, it's time to upgrade. Okay, I know many people love the MetaTrader 4. Hey, we were one of them. We started with MetaTrader 4 back in 2006 or 7 when it was a brand new thing, but MetaTrader 5 is where it's at. We need to move to MetaTrader 5 when we can, so we get the options of trading these new ones. It's pretty similar, really. I mean, it's probably time to make the move. What do you think, Ty?
Yeah,
we made the move a few years ago now.
It is. Look, I just as a novelty, I have MT4 opened on one of my computers, and I even have an account in it. But I am starting to move to. Well, yeah, you kind of have to if you want to get involved in the CFDs.
And I've been chasing about that.
Yes, and I'm starting to get there. So, but it is a really good platform for it, and look, it is very similar to use as well. So don't be afraid of the move. It's not very different to MT4. A lot of the settings are very, very similar. The look and feel is quite similar. It's just quite a bit more powerful. So yeah, if you haven't made the move, don't be afraid to do it, because you do get a lot more options in what you can trade. And CFDs are definitely not available in MT4, and I can assure you they never will be.
Yeah, they just can't be there. So Nvidia, another one that's a US company. These guys make graphics cards. What I wanted to say about this one is look on the charts here. Look for how long this actually was stuck in a little range for. Now, is it still in the little range? No, it's all up and down and all over the place, and we'll talk about the final advanced technique in a few moments. But yeah, realistically, if you get into a trap like this on a daily, why not go down? Look at it. Oh, it's so beautiful. As a scalper, I would come in and I would look at this sequence of events and the subsequent breakouts that occur and everything as the dream of trades, because the buying, the selling, the buying tie, and then the selling again. There's a lot of great trades within this one that you could have been having a bonanza on since pretty much November last year all the way through. And it's as easy as being able to analyze it and really pick it all up probably about here. So in December, all the way till January, the end of January, there were plenty of trade opportunities within this one. So every single stock is worthwhile scanning through. It's worthwhile understanding the market action. And again, it's just another range bound one, just like Alphabet, Google before. Now, most people are going to have this many indicators on their charts, Ty, and it makes sense as a scalper, but which one of these would you say for scalpers is the most important? We've got MACD, Stochastic, RSI, and Bollinger. We like them all. Is there any one that you think, okay, yes?
Okay, so it's a really, really good question, actually. What I like about, I think it's identifying the market. Okay, so if we've got a sideways market and we're scalping, absolutely, we definitely want the 20 moving average and stochastic on our charts. No question about that. Stochastics is an extraordinarily important indicator for a sideways market because it gives you really, really good information. The Bollinger Bands is also a good one for scalping because in a sideways market, I find Bollinger Bands more important in a sideways market than in actually a market that's moving, even though you can use it in both ways, because it really gives you the information that you need for the trade that you're about to place, which is only a short-term trade. When a market starts to trend, Bollinger Bands can still be useful, but I don't believe they're as useful as when they are in a sideways market. And let me tell you something about support and resistance on the stock market and effectively CFDs. You'll actually find that the resistance and support levels are actually more respected in the stock market because these levels, apart from the fact that they're probably fair value, there's a lot of reasons to actually hold a level, being the current market environment, potential reports that the fair value is easy to work out, is basically what I'm trying to say. So you'll find that support and resistance, when it does consolidate like it does here, it can actually hold up for a very, very long time. Now, for a long-term investor who's doing nothing, that's going to be a very boring market. But if you're scalping, it's a very, very active market. And I think that you can see a lot of very, very good opportunities in these sideways markets, and they happen a lot. So it's a really good way to, first find out where your market is. And if it is going sideways, definitely move to the scalp because there are some really good opportunities trading some of your favorite companies.
All right. So yeah, all of those are just some good little areas, I guess, to be looking at. You've also got to think about really, we'll go back into the charts here, the slides here, but you've got to think about the type of trader that you want to be. So a lot of people come in, they say, oh, I want to be a scalper, or I want to be a day trader, or I want to be a swing trader. You've just got to remember that if you're working, it's harder to dedicate potentially to scalping. Now, if you're going to scalp, how much time do you have to put in front of the charts? I would argue 2 solid hours fairly regularly. In fact, I would say you would want to put it aside multiple days of the week, like the Tuesday, the Wednesday, the Thursday, and the Friday sessions, if you can do so. And the reason why that is because it's a time-intensive thing. You've got to be there, and you've got to be very, very quick, in and out, in and out, in and out. Day traders, you need to put in kind of similar amount of time. But swing trading, as we always say, Tyrone, it's the easiest. It's 45 minutes. You barely even have to be a slave to the charts. You can literally just load up the charts after the close of the dailies, make your decisions on the swing, put your pending alerts in, put all of your limits in and everything like that. And it's the easiest for part-time traders. So if you're establishing yourself, it's actually the easiest one. And a lot of the evolution for people is like this. We all come in here, then they go, it's kind of like that evolution before. Then we go here. Then often people go here. And then sometimes they even go to investment, and then they come back to swing. So I'm feeling like that's kind of the evolution of traders sometimes, just to make it kind of a little bit more funny. If you're going to do scalping and day trading, it's important that you are there 30 minutes before the market session open. Now, for Australian shares, it's going to be before 10 a.m. Australian Eastern Standard Time. You're going to be there about 9:30 doing your analysis, understanding the market open. Now, we said before, where there can be some crazy trades in the morning, there can be, but you can also get some breakouts in the morning. So as we say, below target breakouts and potential support buying as well through the early parts of the session. And then the late parts of the session, you're usually trading a range bound area, like more of a consolidation after that initial move. And you're kind of trying to find really the more scalpy thing. The day trade happens maybe in the start and at the end of the day, where people position in, and then the actual middle of the day is often where that scalping kind of concept comes through. Types of strategies, we talked about channel breakouts and channel range bound strategies before. Then we also talked about moving averages and trends with role reversal a little bit. And then channel, as Tyrone mentioned, stochastic and MACD divergence are both excellent to put on your charts as a more advanced technique. Times to trade for swing traders, really easy, 30 minutes to 1 hour of analysis per day, generally around daily closes of whatever the market you're looking at is. So if you're trading the US market, and you're Australian, you just wake up in the morning, have a look at it, and then basically set your alerts for the next day and set your positions and what you're kind of looking for. If you're trading the Australian market, you just wait for the closes or the opens to occur and place your positions around that point. So very much just targeting major indices and setting alerts. Sector performance can be important, Tyrone. This happens all the time. Recently, what have we seen? Tech stocks have been beaten down. And why is that? Because it's a pure sector rotation. People are moving out of tech as they feel like it was overvalued maybe, and they move into what they call value, which has been at the moment energy and financials. You may have heard about that. Now, what will eventually happen is it will rotate out of there. It'll go to the next sector. Maybe the next sector is something like health. Maybe the next sector is something like materials again, who knows? And then it goes back into tech and so on and so forth, and they rotate around. So if you want to find out more about that, we talk about it extensively in our stock masterclass, don't we, Ty? But also it's important just to know sector performance over a recovery bull cycle. They can look like this in terms of sectors, and over a year, you can see some sectors outperform other sectors. Now, this was taken back in October, and I did it on purpose because look at the disparity between tech and energy. Tech was up 45, energy was down 43. Now, if you looked at that right now, energy is kind of like over here, financials is kind of like over here, and tech is actually just over here. So when you look at these types of sector rotations from an advanced technique, you actually understand that things all have price disparities. And when they occur, often it can turn around. And if you recognize that and you have that little bit of bias behind you and you find long bias daily day trader technicals or scalper technicals, even though it's a bigger time frame thing, it can give you a little bit of an advantage. And every advantage is something that we would prefer to take when it comes to trading.
Most definitely. I think you'll find that when you do get on top of the sector rotations and the business cycles, it really opens up a lot of opportunities for the trades that you're not. What you're doing is getting more reason to actually get involved in the market just with more confirmation. I think that's probably the key. Not only do you have indicators and price action, but you've got all these extra little tools to really help you along the way. It does make a very, very big difference.
It certainly does, Ty. So look, channels, you want to understand that type of thing. Double bottoms, double tops, very common. All of these types of patterns are very, very good in stock markets, specifically things like inverse head and shoulders, ascending triangles, double bottoms. They happen all the time. You'll often see a market come up, hit a resistance, hit a resistance, hit a resistance, and then break out of it like an ascending triangle within a trend. And this can happen on as little time frame as a 15-minute or 5-minute. And these are one of my favorite. They're fast becoming over the years. The old ascending, descending triangle, any of these types of things are becoming one of my favorite patterns. I used to love these a lot, and there's a good reason too, but I actually think this is my new one. This is the one. And that's why as you trade for longer and longer and longer and longer, you end up realizing, hey, there's some reasons why that pattern or these types of things make so much psychological sense. And yeah, ascending and descending, a good role reversal. You definitely want to understand this. We assume you do know resistance and support for this webinar today, but you will need to know role reversal for your trading setups. And of course, we don't want to FOMO whenever possible. Being a scalper, this is so important. If we can't control our emotions and be like the robot in the middle, I think you possibly may want to look at day trading or swing trading. If you cannot control your emotions, scalping could be a recipe for disaster. I mean, Ty, how important are emotions?
Emotions are everything. And I was waiting for this slide to come out. Emotions are definitely, absolutely, because they're one of the most important things, right? No matter how good a trader you are, no matter how good your entries and exits are, if you let emotion get involved, you will fail at some point. That is almost a certainty. So you do need to keep your emotions at the table. And in a sense, you know, emotions are even harder in the stock market because people do fall in love with a particular company or share. We in our experience have found that some people really find a love affair with some stocks, and they just refuse to make good decisions. So it's probably even more important to make sure that you're leaving your emotions at the door and trade it for what it is. If you're a long-term investor, of course, just hang on tight and go over coffee. But if you're going to scalp and you're going to day trade, you need to have a very little emotional reaction when you are trading, and have no, of course, love affairs with the shares, because you will not make good decisions otherwise.
It's so true. The 1, 2, 3 trading style, Ty, when you create good structure, this is obviously a currency, but it could be a stock like that Rio one before. If you form a nice resistance and that resistance is broken, especially in a share, when a resistance is broken off a base like this, whoo, it doesn't get much better than that. That is really good, because when it breaks through, it's probably done so for some fundamental reason, or it's ready to reprice, and then it may come back and retest, and that is where you may want to swoop in, be like the ninja, and come in there and scalp that one up, or at least day trade that one up, because this type of setup is a very nice setup in stocks, especially more than anything else. All right, Ty. Well, what I think we'll do is we'll answer a couple of questions. Obviously, these are just some things that we've gone over before. But what I did want to mention was there was a question here. So CFDs. Oh, so if you don't trade CFDs, you'll own the share with no leverage. Is that correct? And so from Mariana, yes, it's correct. So CFDs are a leverage product to give you access to a little bit more buying power, I guess. And that's kind of actually partially the point of why you want to trade CFDs. If you're trading stocks, the problem is you're trading one-to-one. So if you have $100, you only have $100 worth of that stock, or that's all you can potentially buy. $10,000, you can only buy 10,000. Because you're trading, especially with day trading and scalping, small movements, then the reason that can be a problem is that if you're only looking for 1% and you're trading a $10,000 account, well, 1% is cool, it's $100, but it's also maybe not what you're trying to achieve with your $10,000. Yeah.
Well, it's less than one share of Rio, which is a problem on your risk side. So yeah, you've got to. I think the leverage. Yeah, the leverage of CFDs is definitely a big advantage, but of course only when it's used safely. Okay, so it's very important to understand the leverage risks and know how to use it. But yes, it's a big advantage to day traders and scalpers, of course, who are looking for those very small moves. So I've got another question here. Do you have stock in your Discord room? That is a very good question. Yes, we do. The stock component of the room is getting bigger and bigger, actually, and we do talk about the stocks a lot, especially the American ones, if that's what you are interested in. And anyone who actually takes up the masterclass offer actually gets 3 months of private Discord for free. That's $150 value. I'm going to get absolutely shot for putting this offer out there, because I've just seen how many people have subscribed. And I'm going to get in trouble for this. I know Thomas's offer there was 50%. You can get the 70% discount, which is in the all audience. You can click on that, get the 70. That includes 3 months of Discord. So you can see the stock market sections in there for yourself, and of course with the currency side as well.
All right. Well, a couple other questions here. Should make a Presic indicator, says Warwick. Yeah, well, that's probably true, Warwick. Yeah, so Presic's actually something that's included in our courses in terms of being able to get into competition and stuff. So there's some other questions here about like percentages and things. Remember, CFDs, they're relatively cheap to trade as well, which is a big benefit to them. There's a few people concerned about how much brokerage was. The idea is that you can be nimble and be quick. It's not necessarily a very high cost kind of thing. I'll just go into some other ones. I wanted to mention just quickly Tesla and the NASDAQ, Ty. So I want to say, if you're trading, let's say, tech stocks, which index should you be looking at as an advanced technique? Of course, you should be paying attention to the NASDAQ. Now, you'll notice here, just quickly on this chart, the NASDAQ has been in for some turmoil recently, but it's kind of like a little inverse head and shoulders here on the larger 4-hour time frame. You'll also notice there's some consolidation around here with resistances and supports. So what that means is, if you go and look at something like a Tesla as well, that we saw those resistances before. Well, look at this $700 psychological resistance. So if the market goes back up today to that resistance starts testing, where do we expect Tesla will also move? It would most likely try to gravitate, and so would all the tech stocks. They'd try to gravitate to those resistance levels. So understanding that next level of understanding in the market is so important. Just thought I'd mention that one there. Use the NASDAQ if you're trading tech, use the S&P 500 if you're trading the broader market.
Definitely. Now, what we must remind everybody to do, if you can, there will be a survey after this webinar. If you could please fill it out for us and just give us your thoughts, so we can really make these webinars better and better for you. Pepperstone take all the feedback on board and pass it on to us. So it'd be great if you could just take a moment or two to fill out the survey after this webinar, so we can really bring you what you want to see. So we're always trying to make this about the traders and the people. So please give us your thoughts. And we do really appreciate all the questions we've had. We've had so many questions tonight, which is really, really good. And it's great to see so much involvement in CFDs, because it is a really great instrument to trade. Look, it is very, very close to our hearts. Although we've said it a few times, Thomas and I trade the stock market on an everyday level in very, very big volumes. We love it, and we really encourage people to really get on board with it. Now that it's available through the Pepperstone platform, it's only going to get better. More offerings are coming every day. It's a very cost-effective way to trade some of the biggest markets in the world, and you can have a really good time. And I think you'll probably find that your trading will actually improve if you start to trade and transfer to some of your from your currency to CFDs, because the markets do move a little bit slower and steadier, and I think it's a good way to build your confidence up, especially if you are starting out. So please don't be afraid of them, because when used correctly, they are an awesome instrument to trade.
Ty, can you just pop that link back in the room? A few people asked about it. I'm going to answer these questions just quickly. Do you recommend trading, or we can't really recommend anything, but US 30 or US 100 for beginners? Thank you. The good thing about indices are they are some of the biggest traded things. They're the most liquid, and they're also some of the cleanest types of trades. So if you're trying to get into share trading, yes, indices are often where people do start. Then they move into shares as they understand the ways that the indices trade. And it all works in harmony. I think something about the stock market and just the general markets out there is people don't understand how many of these things are all interlinked. And when you start to bring it all together, you think, wow, it's crazy how many of these things I wasn't looking at before. It's that next level of understanding, whether you're a day trader, swing trader, or scalper. Can you explain a little bit more about the 1, 2, 3 technique? Basically, the 1, 2, 3 technique is that you recognize, let's say here, you recognize something's happened once, you recognize something's happened twice, and it's most likely going to happen a third time. Now, in this case, you're using moving averages, and you can see here the 1, the 2, the 3 was a little bit scary, but it did still pay off super hard. So it's that kind of concept. And when you're talking about resistances, what you've got is you've maybe got like a line, it's come up tested, come up tested, come up tested. When it breaks through, we have to be very prepared that it might pull back. But the great thing is, this was clearly such an amazing level because it was 3 touches that when it comes back, it's often met by heavy buying pressure. So think about it as the more something occurs, the more that becomes ingrained in the market psychology, and you can take some advantage of that. There are other questions coming through. VWAP. VWAP is very good for day trading, absolutely. We will do, and I'll actually bring that into one of the webinars soon, so follow us there. And yeah, I mean, there's so many things that I guess, we want to cover for you guys. But yeah, VWAP's not a bad indicator, and it is good for day trading and scalping. I'll bring that in at some point, and I think you'll enjoy that a lot. Remember to follow Pepperstone and FX Evolution on YouTube. Follow Pepperstone's Telegram page. We will see you either very shortly in our next webinar that's after this, about 9 o'clock, if we put the link in there, and otherwise we'll see you in 2 weeks. Have a lot of fun out there, guys. And I tell you what, it's just such an exciting time to be in trading, to be in scalping, to be in everything in the markets, Ty. I feel like people are really educating themselves, and really, I think that's the power to the people in some ways. We're getting so much great information out there. It's never been this exciting to be a share trader.
That's definitely true. So thank you so much for joining us again, guys. I've posted the link for the webinar that's starting in about 5 minutes. So if you want to join the live market webinar for currencies and indices, the link is in the audience section. So you click on that and join us in 5 minutes, which will be great. Don't forget to fill out the survey at the end so we can really get these webinars really to where you want them to be, which is awesome. Thank you so much for joining us again, and we look forward to seeing you in a couple of weeks at the next Pepperstone webinar. Thanks, everyone, and have a fantastic night.
Thanks so much, guys. Bye for now.